Hello guys, and welcome to this live stream. My name is David Richchild. So today we're going to take a look at the market, the state of the market as it is right now. Then we can see how we can implement our strategy in making sure that we get those sniper entries. All right. So we're just gonna wait for a few people to join the live so that people don't lose on the analysis that we make here. So just hold on. If you're already on the live, just hold on because this is just a short notice. So just hold on until we get a decent number, then we start. So you can use the chat, the live chat box to comment, ask questions, and contribute. All right. Okay, we're just waiting for a few people to join. And we will get started, guys. Let's see the state of the market today and how exactly we are going to kill the market today. So we're just waiting for a few other people to join, and then we'll analyze the market. So you can use the chat box, tell us who you are, where you're from, what are some of the charts that you think we should be analyzing today. You can put that information in the live chat box. All right. So as soon as we've got a decent number of people watching, we're going to start. Okay. Let's just say we're giving the next 5 minutes. All right. So whichever comes first, a decent number of people or the next 5 minutes, we're going to start. Whichever comes first, guys. So we got 4 people watching. For me, I think it's enough. Let's start, guys. Others will watch a delayed one because I know some others are still sleeping right now. So guys, just use the chat box to say who you are and where you're from, and what do you think the market is going to do, which are some of the instruments that you want us to do. So I see Isra is saying that I'm not sure if I'm pronouncing your name correctly. I'm sorry if I don't, but it says that God will make further correction, or this is it. What do you think about God? Okay, so we're gonna touch on God as well and see what God is doing. Then we can see if my analysis and your analysis is corresponding. Okay, all the same, guys. People have a different way of seeing the markets, but the general rule is that a lot of people, they see the same thing on the market. It's just that they use different tools or methods. All right. So now we got 5 people watching, guys. I think it's a good reason for me to start this live. Thank you guys for being with me this morning as we look at the markets to see how it's gonna play out. Okay, so just a heads up, guys, I use the terminal called the Richchild terminal, guys. The Richchild terminal helps me to open trades quickly, break even on those trades quickly by just pressing this button called named break even. If I click on break even, all my trades will be put on break even. If I put on lock 70%, it will lock 70% of the profit. If I click on close 70%, it will close 70% of all the trades. If I click on close all, it will close all trades at once. So this is the tool that I use, guys, to make sure that I do my things very fast. Remember, guys, there are times when you're like in profits that you want to close your trades. Maybe you've got a lot of trades and you want to close those trades one by one. You end up, you know, taking less profit than what you were having, because the market starts retracing. So if you just have a tool that you can click on close all, it will close all trades at once. Also break even, very good for protecting your equity. If you go here as well, you can protect your equity by saying max loss accepted. Here I put it 2,000. Target gains, which is your take profit, 6,000. So when it reaches minus 2,000, it closes everything. When it reaches 6,000 in profits, it closes everything like take profit. So it's like your take profit is invisible to the broker, which is a very, very good thing. But it depends on the amount of money that you're losing. So with that being said, guys, that was the terminal. Let's get into the meat of today. Okay, so we're gonna start with gold. As you know, guys, before I do anything, I like to start by recapping my strategy. Okay, so before you trade, make sure that you recap your strategy. The reason why you have to recap your strategy daily, even if you know the strategy, is for you to be on track always, right? Make sure that you don't trade outside of your strategy. You trade only the setups that your strategy entails. So every day, make sure that before you even start trading, recap what your strategy does and then implement only what your strategy entails. Okay, because I know a lot of people, they use different type of things, but whatever you use, whether you use an indicator, whether you use smart money concepts, whether you're using trend lines, trends and trends, whichever strategy that you use, make sure that you recap it before you get started. So the strategy says this: when the market is doing this, right, this is called a ranging market. All right, the market is just going up and down without going anywhere really. Okay, let's do this. Just going up and down, right? So the market is neither going up or going down, but it's just doing a series of ups and downs. All right, just a second, let me turn off my alarm. Okay, guys, I'm back. All right, so when the market is doing this is called consolidation, or it's called manipulation. So you don't want to enter the market when it is being manipulated, because why? This is where people lose money, and I'm going to show you exactly how they lose money when this is happening. Okay, so if we put a rectangle on top here, and we can also put a rectangle below here, you can see that a lot of traders, they are taught, right, to trade these markets as support and resistance. When the market is here, they want to trade because they know that the market has been here, so it's now a support, resistance. They want to sell. Okay, but the mistake they make is that when they do put their trades, right, their stop losses are right above here. So if a person does make a sell, let's get an arrow here, arrow down. Okay, so if a person, right, trades and put a sell here, right, they put their stop loss right above their entry point, right? Most likely people, they are taught also to use a risk reward ratio called 2:1 or 1:2. So they risk one part to get two parts. Okay, so which means their take profit is twice than their risk. So when people trade markets like these, all they want to do is to enter the market, right, whether at the top or at the bottom. Then if they enter from the bottom, they want to exit at the top. They continue doing this. Okay, so if they enter from the top, what they would likely be doing is they want to take profit from here to here. Okay, their take profit is from here to here. Okay, they entered from the top, their take profit is here. So they normally do put their stop loss as half of that. So half of that is normally their stop loss to the downside. So their stop loss will be right here to the downside, and also to the upside, their stop loss will be right from here to there approximately. Okay, so now that we know where these people put their stop losses, right, we won't enter this market before their stop losses are taken out. What do I mean by that? These people, right, the market makers are not crazy, they are not foolish. They won't let these people get away with it. So what they do is they know that there is a lot of money, right, that is sitting on top here and below here. So they want to take that money first before they make their move. So what will happen is that the market will go down, right, and hit these people's stop loss. Then it will come back up and hit these people's stop losses. From here, now the market can decide to continue going up or to go down again. From here, the market can decide if it wants to continue to go up or go down. All right, but these people have to be taken out first, right? These people here have to be taken out. So you see how the market just hits the stop losses and then it moves in the opposite direction. Okay, so with that being said, guys, how do we enter the market? We enter the market when it reaches this point. How do we know that the market has reached this point? We know it by looking at this side, and if we find an order block, this side, this is where the market is likely to turn. Okay, at an order block that is further to the left side. Okay, with that being said, guys, we are going to see how we're going to implement this in today's chart. We're going to delete that. Now let's look at the market from a monthly time frame. So the first thing that we can see is that the market has been going up, but we can see a strong double top right here. A very strong double top. Just a second, guys. Okay, I'm back. Right, so we see a very strong double top on top here, meaning that this position here is very hot. You can see here it's very hot here. The market came here and then it just went down. When it came back there, it was a hot zone. It just went down. Okay, and also guys, according to the structure here, we can see that there was a structure here that was broken. Okay, and we can see this market now breaking through, right, the structure that was broken, right, and currently the market is pushing up. All right, so the market will either come and test this order block, then continue to go down, or it might break this, then come here again, right? So we can see that the momentum right now is going up, but let's see on a weekly. Things might change on a weekly. Let's see on a weekly. Weekly, we can see that the market has been going down, and we can put a trend line here to kind of like see what our trend is going to be like. Okay, so we can see that the trend was down, then we got a triple bottom here. Very, very important. It's on a weekly, guys, so a triple bottom on a weekly is very, very serious, guys. You can see a triple bottom here, which means there was so much buying pressure here. That's why the market kept on going up. All right, now let's go to the daily time frame. Daily time frame, we still have the same sentiment that the market has broken the trend line, the downward trend line, and made a triple bottom, which is very powerful, guys, to confirm a move to the upside. So this market is on a daily time frame still going to the upside. You can see that the market went up, then there was a pullback, it went up, pullback, then it went up again, it made a huge pullback here. All right, and then now it's starting to go up again. Okay, this is on the daily time frame. All right, so one thing that we want to do is let's delete all the things. This was just to tell us the direction, so we know that we are biased on the upside currently using the daily time frame. So let's do this. You can see here that there was a structure here that was broken and retested, so the market is pushing up on a daily. Right, let's go to 4 hours. So in the 4-hour time frame, we can see the market, right, was going up, and then it made this type of consolidation here. So whenever you see the market going up but it does a consolidation that looks like it's going up like this, it means the market is supposed to go down, right? So there was a very, very good chance to sell this market when it was here. Okay, when the market was here, there's a very, very good chance to sell this market. Let's do this. Okay, when the market was here, because you know that the market has to, if it's going up, it has to consolidate going down. If you see it consolidating going up, it signals a reversal. Okay, so that's why the market reversed here. Okay, all right, so but all in all, we can see that the market hit here on the structure and it's going up on a 4-hour time frame. So we're expecting this market to, you know, continue going up. All right, but however, guys, remember we've got some interesting points on this market here. I'm going to put some interesting points on this market. Right, we can see here big consolidation. Right, we can see also this point here, big consolidation, right? And we can also see the origin of this move, which is here. But mind you guys, the market has already formed a triple bottom here. So for the market to come back here, it's going to be a struggle, okay? But we can see this small structure here that was broken, right? So it was broken, then it got retested immediately, okay? So yeah, so we can see that also here the structure was broken and retested nicely here, so which means that the market is probably going up as we speak. Now let's go to the 1 hour time frame and check. We're gonna delete these things. Let's go to the 1 hour time frame. Let's just put a line here to show that. All right, so it's 1 hour time frame. Okay, we also have the rest here that was broken and retested. You can see there was a break and a retest of this structure, and we can see a double bottom, guys, happening right here, and a nice liquidity grab that was done here. Nice liquidity grab, and then the market went up. All right, however guys, we're going to implement it using our strategy. So if you come here, we can see that there are equal lows. Then we're gonna come here and we can see equal highs. All right, nice equal highs here. But since we are looking for buys, guys, remember guys, we are looking for buys. If we look, the only reason why we saw here was this consolidation that happened here that caused this sell-off, but all other things are telling us that the market is going up. So we still have more confluence that the market is going up as opposed to the market going down. So okay, right? So since the market is going up, we have to find a way to enter this market. Okay, so the market went up, it took the buyers were taken out. You can see those wick right here took out the buyers, so we know that the buyers here are taken out. So that's why this market has got the guts to move up like this. All right, buyers are taken out, so we have to find a way to enter this market at a very discounted price. We can see that the market now is at its highest on the 30 minutes time frame from the point of entry. So you don't want to enter the market when it's at its highest. What do I say that it's at its highest? So we are looking at the move from here to here, right? There is no retracement here. So the market is at its highest point since the move that it made from the downside to the upside. So if the market is on its highest point, we don't buy, because we don't buy high, we only buy low. We don't buy high, we buy low, and we sell high. Okay, so from here on, guys, we can see that the market is more likely to sell from this point, just to make a correction first, and then it will continue buying. All right, so my prediction right now is that the market is going to, since it has already, let's put the stop losses of these guys. Let's see if stop losses are hit. According to our strategy, guys, put a rectangle like that, and then we determine the half of that rectangle, then half of that rectangle is most likely our the stop losses of the people, We go down here, you can see that stop losses, they were hit. Looks like people, they just put stop loss just below that, but it's okay, right? Let's go to 1 hour. There's something interesting here, because there was a liquidity grab at the bottom, which means the stop losses for the buyers were hit by this wick, which is nice. We can also put that same amount and put it here. Awesome. All right, so now we see the order block that is close to that is right here. Okay, right here. Mind you guys, this is our stop losses. So right now it's hitting the stop losses, and then after hitting the stop losses, we expect it to now move to our nearest order block, which is this guy right here. Okay, so let me change the color here to red. So we are expecting to sell this market when it's here, but we're not going to sell it for long, because what we want is a retracement, right? And our signature move, guys, will be a buy. That will be our longest. The move that we're going to hold the longest is going to be a buy. But when the market comes here, we expect a retracement, so we're going to sell it. But our movement is going to be a buy. That's the movement that we can hold. Okay, so when are we going to buy? When the market, right, comes back to this point here, we're going to buy the market. When the market comes here, then it comes back to this point, we buy the market. Okay, because we can see that already buyers already taken out, sellers, they need to be taken out, and then the market comes here to retest, and it goes up, breaking this, and then continues going up, since we know that there's so much buying pressure, even from the daily time frame, the 4-hour time frame, and also the weekly and the monthly, there is buying pressure. So buying is the long term, but we expect this market to move further up, hit that red zone, then comes back to retest this yellow zone, which is going to be a buy. Let me put it green. This yellow zone, green zone, which is going to be our buy. Okay, so guys, this is how I'm seeing the markets. If you have any other ideas, share them in the group, and then we take it from there. So now that I've made this, let me check. This is Israel. He says God will make further correction, or this is it. All right, what do you think about God? Okay, so Israel was saying that the God will make further correction, which is correct, because God right now is at its highest point. It cannot continue to buy at this moment. It has to correct a little bit before we make a buy. So, but it's not going to correct at this point where it is right now. It's going to move up a little bit, then it's going to hit that point that we highlighted in red, and then it's going to come here, hit this point, and when it hits this point, it will move down to hit this as a retest. And our move, guys, this is our move that we want. Okay, that is the move that we are waiting for, the one where it hits the green. But also when it hits the red, we also have an opportunity to trade that manipulation that happens there. Okay, because remember guys, there are people who sold here. Why did they sell here? It's because there is a trend line right here. There was a trend line right here. So they sold right here. Stop losses maybe above this point here. So that's why the market has to come and hit their stop losses first before it continues going down. All right. So if it goes down and it comes here, remember guys, there is enough here pressure, buying pressure given by this. It's actually triple bottom. So you see 1, 2, and that liquidity grab to move upward. You can see that there is very good buying pressure. So when the market comes here, we expect a buy, but if this buy doesn't hold, right, we're expecting a break of this structure to the bottom side, retest thereof, and maybe a continuous downwards movement, which is very unlikely, or according to probability, I don't think the market is going to continue going down because of the fact that there is so much buying pressure on the monthly, weekly, and the daily time frame. Okay, so guys, this is my analysis when it comes to gold, and this is what I'm anticipating to do. I'm gonna insert an arrow, let's say the down arrow. So that's a sell right there, and that's a buy right there. Okay guys, so yeah, let me delete this. Any questions, any suggestions, any additions, any subtractions, you can put them in the chat box. Put them in the chat box. Put them in the chat box, guys. Also like this video, share it with your friends, so that they can also, you know, get the info. With that being said, guys, let's move on to our next instrument, which is going to be USD JPY, right? USD JPY. I open my market watch. We open the dollar index and put a nice template there. Okay, so I'm gonna look at the dollar index. What is the dollar index? The dollar index is a chart, right? That is the dollar against every other currency, and see, okay, how is the dollar performing compared to every other currency? Okay, so if we see the market going down like this on a dollar index, we know that the dollar is relatively losing its value against all major pairs. Okay, so that's pretty much what the dollar index. So which means that if it's a euro USD, which means you're comparing if euro is going to gain or lose value against the USD, right? And then you come to the dollar index and you see that the dollar index is losing value. It means that euro might be gaining power over the USD, since the USD is losing power. Okay, so which means you're more likely to be buying the euro USD. So for you to get a dollar index, just make a quick Google search, say, okay, how can I create the dollar index in my MT4 or MT5? They will give you formulas there to insert into your chart when you make a custom or a synthetic chart. So this is a synthetic chart. I cannot trade here, I cannot do anything. All I can see is information that I want. So this is the dollar index, guys. Also on the dollar index, we can see that it's been going down. The dollar the dollar has been going down, right? But it reaches this point which it can go up, but overall, guys, the dollar excuse me guys, the dollar is not doing well ever since here on the 3rd of November. The dollar has been on a downwards. So which means that the pairs that are against the dollar are actually probably going to be stronger, which means they're going to be going up. Let's see about that. When you go to USD JPY, right? USD JPY, we can see it's been going up. Let's go to the, still on the 1 hour. We can see it's been going up. It's been going up. But USD JPY has been going down from the, we're looking at the period from 3rd of November. USD JPY has been going down since it's USD versus the JPY. It's the same thing here, guys. We can see that the USD has been going down, so USD also here has been going down against the JPY. Okay, so as you can see, guys, this chart here is almost similar to this chart here. You can see now that there is a liquidity sweep or liquidity grab down there, and you can see a return to this level here. If we can come here, we can also see that we can draw that line right here, and it can also look just the same. All right, so this is on a 1 hour time frame, but you know, we like to start on a monthly time frame for us to see the bigger picture, right? Let's see. There is a nice big engulfing candle right here, which means you can see that this candle right here was engulfed completely engulfed by this next candle here. So which gives us, or which kind of like signifies a strong bearish movement, right? Strong bearish movement on a monthly time frame. That's all we see. Let's go to the weekly. So on the weekly time frame, we can see that the market has been going up, and it's been leaving. You see these retracements, and it comes back and retests that retracement, and then also you see this retracement here to come back and retest that retracement. So this market is on a retest of a retracement, right? But it went there with so much big momentum like this. So the market, what it did here is it came here, reacted off this structure here. It went up, but the selling pressure is just too much. It came down again to this structure. That's on a weekly time frame. So our bias right now is not yet clear because this market is in an uptrend, but we can see the momentum is on the downwards. Okay, so let's delete. We're not clear yet. We see the trend is upwards, but the momentum is on the downwards. So let's go to a daily time frame. Daily time frame, we can put our nice trend line there. You can see the market hit the trend line and it come here, right? Potentially it wants to hit the trend line again before making its move. So let's do it like this. Okay, so we can see the market approaching to hit the trend line again. All right, and let's see the daily time frame, guys. Okay, let's put it up there. Then we're gonna put another one that's going to be on the precise points right here. Exactly. All right. So we can see that the market was doing an expansion right here, expansion wave right here. So the market can hit here and continue to go up since it's been making series of high highs. But you can also see, guys, this is a move to the upside followed by a consolidation that's going up, right? And it's expanding. So chances are the market can break here, or the market is making a double bottom right there and goes up. All right, so here, guys, still we're not clear whether the market will continue to go up or we go down. So we're not clear yet. We don't want to make up stories. For now, we can see that the market has a momentum of going down, but the trend is overall up. So we don't want to make up stories. We just want to see what the market is doing. And for now, we don't have any information whether the market can be predicted to go up or down. So let's go to the 4-hour time frame. At the 4-hour time frame, we see a very interesting something happening here. We've got a nice liquidity sweep right here. Remember our strategy, guys. So the market came for an order block, and now it's back to a point where we usually TP. All right, so what does this mean? If you don't know what this means, guys, so the market took the buyers out, took the sellers out, and made a nice move to the downside, right? So we can also interpret this by saying, okay, the market went down and it did a nice retracement, broke that, and we expect the market to continue going down. But however, guys, we can see that there's so much buying pressure on this week right here. You can see that this week is a 4-hour week, guys. It's a week, but it's a 4-hour. It's in 4-hour time frame. So if you see something like this, it means there's buying pressure here. Buying pressure, a lot of buying pressure. So which means somewhere around this week, we can expect a reaction. But what's the direction of the market? That's our question. Okay, still the question hasn't been answered yet, but what I can see from now is the market trying to push down because it made a drop, made a retracement, and broke that consolidation, right? And we can see that liquidity has been taken on the upside, liquidity has been taken on the downside. So this market now is making its move. Now the market is making its move. So this move is a downward move. So what I'm expecting here from the 4-hour time frame is a break of this, retest thereof, and continuous movement to the downside, right? Continuous movement to the downside. If this doesn't happen, the market will turn from here, right, and move up. Because guys, here we can see that buyers and sellers have been taken out. The market has to make now its big move, whether it's going down or going up. So here guys, we expect a big move to happen either today, tomorrow, or next week. We expect a big move to happen since this has already happened. Okay, so how am I planning to trade this? Right now, if I see a market presenting to me something like this, my juices for trading, they start flowing, guys. It's like saliva, you know, when you see food that you like, how your saliva just, you know, fills up your entire mouth. That's what happens when the market comes to a point like this. Okay, for me here, I think I'm going to wait a little bit. Let me delete this stuff. Right, we know that there is a trend line coming from here. Let's go to the 1 hour and check what's really happening. Okay, so what's the lowest? Was the order block. So we have a nice order block right here. We can see this order block, the market is already starting to react off it, right? Let's go to 30 minutes. Let's go to 15 minutes, 5 minutes. All right, so here we see a nice downwards movement that was broken. Remember what I told you in the last video, guys, that if you see a trend line like this that was broken like this, if you put your line exactly where it was broken, it's a point where you can enter, right? You can see here this line. Let's put it exactly where it was broken. There, see, the nice entry point. Okay, but however, we missed that. As we were analyzing this market was doing this. It went to a very crucial point which we could have bought right there. So now our bias now is buying. Let's see if there is any potential liquidity grab on a 1 minute time frame. Come here, put a rectangle right there. Okay, so now we are implementing this strategy. Now we have seen that the market from here, it can buy. Okay, so we want to enter a nice buy. So we got liquidity at the top there. We got also liquidity at the bottom here. Let's go to 15 minutes, 30 minutes. Right, 30 minutes, 1 hour. Right, so the only point, guys, I'm gonna place a buy is when the market comes back to this week. You know why? This is the next point of value, right? When this bottom here is broken. So when this bottom here is broken, this is the next point of value. So this is where I'm going to enter, guys, here, and ride this market up. I'm going to enter right here, ride this market up, because I cannot enter the market right now since it has already gone up. So what I'm expecting to see here is a consolidation like this, right? Then break this structure and goes down to hit this place here, and then I'll buy it. Okay, or what's going to happen is, since we guys are buying, the market can continue here, since it has already made this kind of like a head and shoulder. You can see here the head and shoulder here. We can see that the market might be making its way up, so we can see a nice break, right, and a retest of this, not that, of this one. You know why? Because it will be a liquidity grab to the top side, hitting this order block right here. So we're expecting it to hit here and come here. Since we are expecting buys, we can continue buying from here. Okay, so depending if the market goes out of this range, hits here, it comes back, we're going to buy it from here. But if the market from this range does not break to the upside but goes down, it will hit here and then we'll buy it from there. Okay, so guys, this market is trapped. This market is trapped. As you can see, it's trapped. We set our traps. We know what we're going to do exactly. We know exactly what we're going to do, right? So this guy is saying, I see good entries like this, but when it comes to enter, I either miss the trade or taking trade early. You know what I call that? It's called the spirit of losing. If you don't want to lose in the market, you have to make sure that you get rid of the spirit of losing. The spirit of losing is entering too early or being scared of entering when you see the market making its moves, right? So get rid of that, guys. Get rid of that. This is, you're now saying that I see good entries but like this, but when it comes to entry, I either miss the trade or taking the trades early. You have to get rid of that mentality of taking trades early, right? And the only way you're gonna do that is for you to develop a certain level of discipline. Because when you enter the market early and you lose, what do you learn from that? You must learn each time that you make a loss. If you make a loss and you don't learn, that means that money is a loss. But if you make a loss and you learn something, it means you have actually not made a loss. You have paid your school fees for learning, right? But if you're just, losing and losing, but you're not learning anything, then that means that you're losing money. Okay, so whenever you enter the market early and then you get taken out or you get blown, what does that mean to you? What is the lesson that you're learning from there? If you don't learn anything from there, then you are a loser. All right, I'm sorry to say this, you're a loser, because you're coming to the market to just put in money and money is getting lost and you are not learning anything from that. So I'm saying this because I want it to get to you and I want you to revise the way you trade, and you see that this thing of keeping on getting to the market, doing the same thing over and over again, expecting different results, is not going to work. Okay, you have to get into the market and set your rules. Enter only when your rules are saying you should enter, and also trade according to your rules. Okay, if you make a mistake, learn from that mistake. Don't repeat the same mistake. If you repeat the same mistake, it means you're just not going to make it, right? So with that being said, guys, if some of you also have that problem of entering trades too early or all of that, do yourself a favor. Do not use your money to trade. Trade demo. And when you trade demo, make sure that you are implementing good risk management. And after that, if you see that you're now good and fit, then go into the live chat using your own money. Otherwise, you're going to be donating to the market. Take for instance, you want to enter the market when it reaches this point. But you as a person who enters early, you enter here. Now the market continues and then hit this point and then goes to the direction that you thought it was going, but you entered too early. It's a recipe for disaster, guys. You are setting yourself up for failure. So don't enter too early. Put your zones, then wait for the market to come to you. Don't run to the market. The market must come to you. I have a phrase that I use. It's called "come to papa." You understand? So you're on the market. You have outlined your zones. You wait and you say, "Come to papa." All right. The market must come to you. It must come to papa. Right? You must just relax. And the market must respect you, right? It must come to you. Okay, this is my line here. And I say that the market is going to come to this line here and go down. So I'm going to wait for the market because I know it's going to do what I say it will do, right? So for you to get that level of confidence, you need to have had a good experience with trading. So that's why I'm saying practice, practice, practice. Practice means, take for instance, right now there's World Cup, right? You cannot practice the World Cup by playing the World Cup. You understand? You cannot practice the World Cup by playing the World Cup. A practice is a practice, right? A friendly match is a friendly match. Then a World Cup match is a World Cup match. So don't go into the World Cup before practice. A practice is not a World Cup match. So that's what I'm saying. Other people, they say, trading demo, what? No, trade demo, right? But when you're trading demo, make sure that you are attaching, you have this kind of mentality where you say, this money that is in the demo account could be my money. So what you can do is if you use brokers that allow you to set the amount that you want to start with the demo, you put the exact amount that you want to start with. Take for instance, you want to start with $1,000. Put $1,000 in the demo account. Set $1,000. Then start trading that $1,000. If you lose that $1,000, it means you're going to lose your $1,000, right? So be afraid if you're losing in a demo, because that's what can happen, right, to your money, right? So yeah, so put 1,000. If you can lose it, just know that if you put in 1,000 there, it's just going to be the same thing, right? That's what I encourage you. I'm not against trading demo, guys. I know there are a lot of people say, don't trade demo here, demo. Trade demo, perfect your strategies. Then when you are now confident with your setups, you don't miss any setup, because you know that, hey, I know how these things plays out. You enter the market, let's take for instance here, you're anticipating the market to go down. Even when the market is still going up, you enter a sell because you know what's going to happen here, right? This is what I do, guys. If I want to sell here, don't wait for rejections here. Even when the market is still buying, as soon as it hits my point, I'm going to sell because I know what's going to happen there and I'm confident of my setup. That is how you can mitigate that risk, guys. I'm sure I have stressed enough on this point. I also had a mistake of doing that thing, trading too early, or being scared of entries. That's if you want to know something that can kill a trader, it is that thing. All right, so let's move on, guys, to the next instrument. So since this is USD, JPY, any other USD currency could be having the same type of movement, but depending on which is the best currency that we're looking at. So this is odd JPY. Sorry, I think I put there by mistake. GBPUSD. Let's look at GBPUSD, guys. Here now, let's go to a monthly time frame. Monthly time frame, we can see big rejection on the downside and a nice movement to the upside, which signifies a very, very good bullish movement. But guys, we can see this is a crucial point right here where the market is. The market has bounced off this line here a number of times. It also came here and there was a reaction again before going down. So what can we take of this? We can also take it as a liquidity grab, guys, since we can see that people saw a bounce here and they saw a bounce here, then come here, they were also expecting a bounce. So we've got people who bought here, the swing traders who bought here, say, okay, let's buy here, want to ride this market all the way up. Oh my god, the market just went down like that for the past, I don't know how many months, 1, 2, 3, 4 months. The market was going down. And guys, there are people who were like, you see on this week, the market is going to buy from here. So they also bought here, right? And they had to be taken out by this wick right here. You see the wick just took out everyone, right? Their stop losses were taken out, especially people who entered here, who were like, this is a hot zone, so we're going to enter here. So remember, there are people who entered here, market came here, took out their stop losses. The people who entered here took out their stop losses. Now we can see that the stop losses are taken for sure by this wick right here. Just a rejection, right, that took the stop losses of these guys. And now we can see a movement to the upside. So chances are, guys, this market is going to continue to even break this point and move upwards. So we are very bullish when it comes to GBP USD. Okay, and also at the same time, guys, we can see that the dollar index is going down, right? Dollar index is going down, so which means the dollar is going down, which means GBP is gaining value over USD, which means also confirms or fact that this market is going up. The GBP is gaining value, right? Okay, so we are there. Let's go to 1 week. 1 week, people might see it as a, let's take things for what they are. So we're gonna insert a rectangle. Let's put it right there. Right, you can see the market doing a liquidity grab right here. It went up, grabbed liquidity, it went down. It was supposed to buy here, but remember, guys, people here were taken out and the market went up, right? So what does this entail? The market was supposed to, since liquidity was grabbed on the upside as well, the market was just gonna come here. Initially, guys, the market was supposed to go up from here, but what happened? It decided to go down, take these people out. So right now we can see that the market is making now its last move, which is the biggest move that it wants to make, which is the upside movement. Okay, so however, it is very dangerous for us to trade a buy here because of the fact that the market has already gone up, right? We see that the market has already gone up. We cannot buy at this point because the market is high. The price here is too high for us to buy, right? We want to buy this market at a discounted price, which means the market has to pull back a little bit and then we buy it at a point where it's discounted. So let's find what are those discount zones. Let's move on to 4-hour time frame. So before we look at a lot of things, let's just talk about structure a little bit. Okay, let's do this and see the structure of this market. So from here you can see that the market has been going up, breaking these structures, You can see that structures are being broken. Okay, structures were being broken. All right, so this structure was broken, retested, broken, retested, even broken, like that, broken, right here. This one was broken and retested, but there was no big retest here. So you can see it was retested immediately. So that was an immediate retest right there, right? So this is our first area where we think the market still needs to come do its thing. Apologies. Broken, retested, broken, not retested yet. So another point is this. So if this buying momentum is too high, the market can just decide to come here and continue going up, right? But we have to understand that this market is more likely to hit an order block. So we can see that there's an order block right here, which is that. Okay, so we're going to delete these other ones that we do not use. Okay, so we've got these two, because this one was not, it was broken, but it was not retested. That's why it's still valid, right? And this one, there was a break here, and then we have a nice order block right there. Okay, nice order block right there. So our buys, guys, are going to be, I think we can also implement the liquidity grab strategy. Let's just come here and put this in yellow. Let's go to 1 hour time frame. Right, we can see that there are equal lows here and there are equal highs on top right there. And all right, so look, this is what's good about this. It actually showed us another thing here, that this market is more likely to turn right here than the order block that we put initially. Why? It's because of our strategy that when the market breaks, it hits an order block, it comes back and hits here again. Okay, so if it decides to sweep the liquidity to the downside, it will sweep the liquidity, then come to this place here. Okay, so I can see the distance between here is small, which gives us that this is where the market is more likely to turn than there, right? Because liquidity is going to be taken out, it's going to come again, then it's going to take liquidity to the downside and then hit the next order block, which is right here. Okay, so that's on a 4-hour time frame. GBPUSD, we really want to buy this, but we cannot buy it just yet. The price is just too high, guys, for us to make a buy here. So let's wait for the market to come back to either this green. We enter at the green. If this green is broken, we'll wait again for it to reach here, and then we enter a buy. So we want to wait for a discounted price, guys. We won't be trading or entering the market at its high and we buy. We know that it's a buy, but we won't be buying at its high point. We need it to retrace first, and then we can go high with it. Okay, so take for instance, if the market was here, this is what I'm saying, guys. You see that the market has been going up and you want to buy, and the market is right here at this point. If you buy here, what's going to happen is that you don't know that it's going to retrace like this. So this is what we don't want. So we want a nice retracement to an order block like this, then we buy it. You see, it's the same thing that we are waiting for it to do here, to come here or to come here, then we buy it. It's as simple as that, guys. That's how people lose in the markets, by entering the market too early or buying high. Don't buy the market when at its highest point. You only buy when it comes to the lowest point or lowest or the low order block where the market is actually discounted. That being said, guys, let's go to the lower time frame and see if we can have some capitalist movement, right? So we are here, 30 minutes, 1 hour. So we see that there was a liquidity grab. So there was a liquidity grab here. So where is our order block? Okay, let's delete everything. First of all, let's okay, let me just delete the things that I don't want to use, like this. Okay, these ones, I'm gonna leave these ones. I'm going to leave these ones. Then yes, I deleted those ones. Okay, you also delete that. Right, so capitalist movement is a movement that we're going to take here, guys, as a sell in this market. This is an advanced entry, guys. You don't enter a sell when the market is going up like this. But for those who are interested in scalping, right, you can see that the market did break. Let's go and adjust these nicely. Okay, so we have a nice equal highs, nice equal lows. Now let's determine the stop losses. Stop losses. So it's going to be half of what they want to take profit on. Come there. Let's do that. Let's come here. So now we can see that the market is where stop losses are, and if we come here, stop losses are down here. That's why we're saying that the market is more likely to hit this order block and go up, because stop losses have to be taken out first before going up. Okay, let's delete that. So now we see the market is where the stop losses are. So what's going to happen? The market has to take out the stop losses and go to the next order block. So our next order block, guys, is, let's check here. So according to our market structure, we can see that the market is going up, then retracement, break, retracement, break, and a retracement, right? Then we've got a break here, which was not retraced. Break here, it was not retraced. So what we're going to do is to put a nice zone up there where the market is going to turn. So let's also go to the 4-hour time frame and refine our order block. Okay, come there. That is the 4 hour. Okay, let's go to 1 hour. Okay, we do have that. In 1 hour we have that. Let's go to 30 minutes. 30 minutes, we've got that. 15 minutes. In 15 minutes we've got this. Okay, so here is to a person who is interested in taking risks, right? You can come here, the market can come here, since to be hitting the stop losses of those people and hitting the next order block, it will go down either to this point and continues to go up, or it can continue going down to this point and hit here in order for it to go up. So we are overall bullish, but this market can continue going up at this point, hit this order block, of which a person like me who is not afraid of risk, I'm going to sell it. Then I know that I'm going to go out maybe somewhere here or there, wherever I go out. Or if I make my target, I'm just going to go out even when it doesn't reach my take profit. If I make the money that I wanted to make for that day, I just go out. So we wait for this market to come to this green position before we actually buy it. So guys, it's all about, doing your setups, then waiting for your setups to play out. So that is GBPUSD, guys. Remember, guys, we did an analysis for gold. We went to USD/JPY. We went to GBPUSD. Let's see on a 1 minute time frame. We can see what the market is doing right here. It's very confusing. So better look at this market on a 4-hour chart. But your entries, of course, when the market is about to come here, you switch on to a lower time frame so that you can make a perfect entry. Okay, but here just to show you the points that are interesting on this chart. Okay, ladies and gentlemen, every time okay, cool guys, so let's move on, guys. EURUSD, I know a lot of people trade EURUSD. After that, guys, we're gonna move to US30, and we're gonna finish with the NASDAQ. Okay, so stay tuned, guys. Let's go to EURUSD and do our analysis very quickly. Let's go to the dollar index. We know the dollar index is going down. It has been going down, right? And so the euro is most likely to be gaining power over the USD, which is evident here, guys. You can see the euro is just making a very big momentum to the upside. One thing that's notable here is that the market is like that. It has not reached the point here where it can we can say, okay, it's retesting the structure and going down. So this also presents a very good opportunity for us to continue buying this until this point. Okay, because it also hasn't reached even the body of this order block right here. So this pace that is from here to there is actually a big move that we can capitalize, since the market is already having a buy momentum. That's the first thing that I see here on this market. Now let's get to the weekly time frame. Right, we can see as well that we had a nice downtrend, which was broken with a very big momentum to the upside, guys. And we have that order block right there that broke this structure here, which was retested. You can see a reaction that was done here by the market when that order block was tested. That's a weekly time frame. Let's go to a daily time frame. Okay, cool, guys. Sorry guys, I've been having network problems with my OBS, but I hope it's reconnected. So we can see that, guys, there's a swift move to the upside, very swift move to the upside. The market tried to react off this order block, but there is still a swift move to the upside right after that, which means buyers are not playing. Okay, so what do I expect here? Let's go to the 4-hour time frame to get a more glimpse of this. So guys, we have got structures being broken. You've got structures being broken, but this structure has not been retested yet because this move was just too weak to come to this structure. So we can see that the market either reacted off this point right here, right? Didn't even touch that because the buyers are just too much, right? This gives me an impression that the buyers are doing their best. So if you come here, you can see that the market was supposed to make a swift move to the downside, because we can see this pattern here is a reversal pattern. It's a reversal pattern because you can see there's liquidity grab to the top, and we can see like an arc forming here. It was supposed to move down a little bit, but by God, see how the buyers just came in off this order block and moved the market to the upside. So now we can see that the market was also supposed to react here. It was supposed to react here, whether to hit here and then go down, but it didn't. It just went up. So it means buyers have got a lot of momentum. So let's go to the 1 hour, guys, and we can see if there are potential entries to the buy side, since buyers here, guys, are buying this EURUSD, right? So we're there, insert, and the buyers that we are talking about here are not retail buyers, because you can see those movements. They are big movements, guys. If we come here and we put our equal lows, so low, 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 okay, high, 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 okay, so we got equal lows, equal highs. Market comes down, it just hits the stop losses. It went up, right now to hit this point, right? Remember, guys, when stop loss are hit, the market can come here and reverse, or it can go and hit the stop losses of the sellers before going down, okay, right? But we can see that the market here, guys, has got a very, very big buying momentum. Very big buying momentum. If we go to a line chart, you can see that already this high position here has already been broken, right? It has already been broken, and there's a retest happening, which in my sense right now, I would want to buy this market immediately. So let's go to 30 minutes, 15 minutes, 5 minutes. All right, 5 minutes, we see that there is a nice double top, which might be a very, very it's a trap, what I see, because this market is clearly going to buy. It's a trap for people to sell here, right? And now it's going to their direction, and I believe that this market is just going to come here. It has already come there, and it's going to go up. So guys, I'm placing a buy on a EURUSD immediately. Placing a buy on a EURUSD immediately. I think let me do it on my mobile. I'm buying, guys. If you're also like me, you can also place a buy. So that's EURUSD, guys. Placing a buy on EURUSD. Then our stop loss should be just below this. We don't put a big stop loss, just below that. Put the stop loss just below that. Don't tolerate big stop losses, because big stop losses, it means big loss. So our losses have to be very minimal. I don't normally trade when it comes to analysis sessions, but yeah, whenever we see an opportunity, we capitalize on it. All right, so there we are, guys. Let's move on to the next, which is US30. There's something that I've realized, guys. US30 and GBPUSD, they move, what can I say? If you go to 1 minute here of the GBP, this is US30, then you go to GBPUSD. Let's go to also 1 minute of that. You realize that when US30 is going down, GBPUSD will also be going down, or one instrument goes down before the other, right? So they kind of like follow each other there. They follow each other, right? So let's go to US30. Let's make our analysis on US30. Let's make our analysis on US30. Hey, this market is weird, guys. You see, this chart is a weird chart. But let's go to 1 month. So it's also evident that when the US dollar is going down, we see US30, NASDAQ, gold, and other currencies going up. Okay. So on a monthly time frame, we can see for the past 2 months the market has been going up, and we can see an engulfing candle here, which means that the buying pressure is just too much, right? Let's go to the weekly. You can see that there was a structure here. So the market now is at the structure. Hopefully it's going to break this structure because the buying pressure is just too much. All right. Let's go to the daily time frame. The market has been breaking structures. Right. Just like that, just like that. We also expect this structure to be broken, forming kind of like a W formation. You see, nice W formation here. So if there's a break here, we expect a retest and then movement to the upside. However, let's go to the 4-hour time frame. Let's delete everything. We know that the movement is up and the market has already gone up. Remember what I said, guys. We know that the market is going up, but right now is at its highest point. So what should we do? We must wait for a retracement. Okay. If we come here, we can see that there's a consolidation that was happening right here, right? And this move to the upside here, we take it as a liquidity grab for the people who are selling here. So the market is likely to come down here, possibly take out the people who have bought here. Remember, there are people who have bought here. Take out those people and So we are anticipating this market to maybe go up a little bit, then eventually it is going to come down here and then go up. So we wait for the market to come here. The market must come to Papa. You must not chase the market must come to Papa. All right, let's go to 1 hour for those now who want to capitalize on smaller movements, right, or what we call scalpers, right? So this is for the scalpers in the game. We see that we have got a nice consolidation happening here. I think you can see it clearly in 30 minutes. Consolidation that was happening here. We have a nice liquidity grab that hit this order block. Came again to hit that order block. The market is going up. So guys, it's confirmed the market is going up. See a break, retest, going up, another consolidation on top here. Another consolidation happening. Right, so we expect a break of that. Let's go now to 15 minutes or even 5 minutes. So a break of that and a retest of the nearest order block. Which is here. So if you want to buy this in the immediate term, you wait for the market to do this and you buy. Okay, but remember guys, we are waiting for our nice buy right here. It was right there. But however, you can also buy it right here for the short term. Okay, let's go to the US tech. US tech chart is almost the same. So the NASDAQ chart is almost the same. We see a consolidation happening there. And consolidation also happening on top right there. Expect a break to the downside and hitting this order block here. Then the market is going to shoot up. Simple as that, guys. So here we are, guys. These are our traps that we have set. You can also, put these, make screenshot of these. Okay, so this is US tech. You can make a screenshot of this. This is 5 minutes. Make a screenshot and also put it on your chart. Right, I'll wait for you to make a screenshot, or maybe you can make a pause later after the video and put it on your chart. Then US30, same thing, guys. The market is gonna do that, right? EURUSD, right? We said EURUSD, we said we're gonna place a buy, and look at what the market is doing. It's already buying. Okay, let's wait. I'm already on a buy, guys, on a EURUSD. Let's go to GBPUSD. What did we say about GBPUSD? Forgetting now. Okay, so this is where we're going to buy on a long term. It comes here, we buy. But if it breaks here and decides to come down here, we'll buy here. Okay, that's GBPUSD. USD/JPY, we're saying the market might continue going up, hit this place here, when we can sell it just for the short term to let it come to this point to overly buy it now on a long term. Okay, now when it comes to the gold, we say that it's going to hit here, comes back here, then we buy it, right? So you can sell here or you can buy here, depending on. A sell here is more risky, a buy here is more like having better probability than a sell, but you have to wait longer for the buy. Okay, right? So that's it, guys. If you don't know how to use the terminal, for the guys who are in my premium group, have got a license to use the terminal for free. Okay, so you get a free license to use the terminal, in which you can use this terminal to advance your trading. Just a recap of how the terminal works. You can see, guys, the unit size here is 0.1. What it means is that when you open a trade here, it will open a 0.1 trade, but the trading mode, if it's on brutal, it means it will open more trades, right? So I'll take an example of, let's say, view toolbox. Let's go to trade, right? So if we come here, guys, right, if we set it to brutal, it means it's going to open more trades, but the position factor is going to determine how many positions are going to be open. So here it says 5,000. So what will happen is that 5,000, my balance here is going to be divided by 5,000, and then the result here is going to be the number of trades that are going to be opened. So 5,000 into 49,000, that's about how much? That's about 9 trades, right? That's about 9 trades. So it's going to open 9 trades. The maximum number of positions is to limit the number of positions that are going to be opened. So in this case, it's 20, right? So stop loss is the stop loss that is going to be opened as soon as you open your trades, right? Take profit is the take profit that is going to be put on your trades. Trailing stop loss, that's your trailing stop loss. Then the equity protection now, cash amount, you can put it on cash amount or percentage of equity, right? So what this does is that when you put it on cash amount, it means that max loss accepted here is set on 2,000. So we not accept a loss that is greater than 2,000. If losses go to 2,000, it will close all trades and protect me from being blown or to lose the money that I don't want to lose. Total or target gains, it's 6,000. So when 6,000 is reached in profit, it means I will take my profit and get out. Lock percentage is just lock and close position percentage are just percentages that I use to lock and close positions. All right, I'll show you how that works right now. So right now it's activated. Let's take, for instance, I want to do a sell on a GBP USD, right? I want to do a sell. All right, so it opened 9 trades. I just clicked sell here. It opened a total of 9 trades, right? It opened a total of 9 trades. If I click on close 70%, it will close 70% of the trades, just like that. If I say close all, it will close all the trades. Okay, so if I place a buy, same thing will happen, right? You see the stop loss is being placed right there, depending on where you want to place your stop loss, right? So when the market now is going in your favor, you can click on break even to put break even on all the on all the trades so that you don't lose anything. So this is a buy. If I click on break even, all those that are in profit will put a break even stop loss. You can see break even stop loss was put there. Let's see what happens if the market tries to go and hit our stop loss, that is break even. You see the ones that did break even, they were closed, so I didn't lose anything. I can come here, then I can put break even again. Just that now I cannot put a break even because all trades are in loss. Right now, let's see if trades are going profit. Okay, they are all in profit now. Let's see. Yes, they are all in profit now. Let's say break even. So break even was put on all, right? So which means from now on, I'm not going to lose my capital, right? All the stop losses are set to entry point. Okay, so unfortunately stop losses were hit because they are too close to the entry price. If I say, okay, I want to close 70% for now, let me leave this one. Okay, close all trades. So you can do all these things by just clicking once. That's the power of the terminal, guys. So me, Richchild, guys, I'm out. See you guys in the next video, in the next live. If you want to be part of the VIP, you can message me at David_Richchild on Telegram, and we can give you more info about that. So happy trading today, guys, and make sure that you follow your trading plan and do not compromise on that. See you guys next time. Thanks, guys, for watching, and yeah, I'm out.